is up? So today I'm going to be doing a supply and demand video real quick. I'm going to be doing a tutorial on how I take my supply and demand trades and what I do and what is my system that I use basically for my setups and what helps me understand where the market's going. So typically when I'm on a pair, I usually for structure I'll use the 30-minute and sometimes the 15-minute on a certain pair. Like for example, Australia moves slower, so I'll use the 15-minute to the 5-minute. Okay, so what we're gonna do is this. Here's what we're gonna do. So you're gonna go on your 30-minute structure or 15-minute structure or 15-minute time frame. I'm on the 15-minute time frame right now because I'm on GBP AUD. And what I'm gonna do is I want 4 pieces of structure to confirm where I'm going. Now we obviously know the direction, but we're just going to do it this way because this is how I use it in my system. So you want to start when you're marking your structure, you want to start from right to left. So we have a low here, and we have a high here. Okay. Next we have a previous low, and we have a previous high right there. Okay, and the reason I'm going to stop here and not keep going is because all I need is 4 pieces of market structure to confirm the direction. And what you want to make sure is you don't want your market structure to look like this. You don't want to see, like, for example, down, blah blah blah, blah. What's it called? You don't want to see something like you have a high, you have 2 lows, and you have maybe something there, maybe like a not really a low, and then something like, yeah, just you don't want all that bullshit. You want, hold on, I'm sorry guys. You want to make sure if you're selling for trades, if you want to make sure you're selling for profit, you want to make sure the low that you're targeting, the low that you're writing your structure for needs to break the previous low. So what I mean by that is you see how this current low right here broke the previous low? We always need to see lows and breaking new lows when we're selling, and we need to see highs breaking highs, okay? So we have 4 pieces of structure to confirm. This structure is our current low. This piece of structure right here is the previous high, okay? And then previously, before that, we had a low here. Then we had a high. So if you notice, the current high broke the previous low, okay? And the previous low, what did the previous low do? Yes, it broke the previous low after that, but what did it do? I'll give you a couple seconds. It does nothing. You know why? Because we didn't finish even marking up structure here. So you would have went up to here. So we would already have 3. So this wouldn't be your structure, right? So if you're like, oh, it's a low here, then high, oh, we're going down. You need this high here, okay? This high here broke the previous low, which is here. I'll draw it just to show you. And so that is a valid low. So all of our lows and all of our highs are valid lows and highs, okay? Now, once we have our market structure, I'm going to write that step down. All right, sorry about that. That's our first step, okay? So we have our first step done. We have our market structure. We have 2 lows and 2 highs, 2 lower highs, okay? 2 lower lows and 2 lower highs. So the next step is, once we identify our structure, we need to identify our current range so we can make a trade and make money. So what we do is the current range is obviously this current high and this current low. So we want to take a tool called the Gann box right here. Look below the screen. The Gann box, Gannbox. It is on TradingView. So take that, and then what you're going to do is when you're selling, you're going to mark from low, the wick from the low to the high. And when I mark for structure, I mark my wicks. I don't really do the bodies when I'm doing structure. I use bodies for other things, but when I'm doing structure, I count the wicks too. Because sometimes when you're on, like for example, another time frame, this can be still structure and we just won't see it. So once we have our Gann box and we marked it from our high to low, you take it like this and you drag it to the low. And once you're doing that, you'll notice the middle line is your 0. It says 0.5. Now what this stands for is supply and demand, because that's what we trade, right? Supply and demand. And so if we're selling, guys, we're making money off of what? Supply or demand? Supply. Okay, so what we're going to do is since we're going to make money off of supply, what does that mean? Are we going to make money at the bottom of the range, or are we going to make money at the top of the range? So if we're selling, we're probably going to make money at the top of the range, right? Because the top is a supply. It's a sell off of supply versus demand. If this was a demand, if we were buying, we would take trades off of demand zones, and demand zones are at the bottom of the range. Okay, so I'll even write that down. Supply zones are at top of range. Demand zones are at bottom of range. Okay, so I'll write that as a little note right there. You can write this down in your notebook. I'll put that there. Okay, so since we know what we're doing, so now we know that supply zones are at the top of the range, and to sell, we want to sell at the highest point because we don't want to sell at the bottom. We don't want to wait till it's over, right? So what we're going to do is we're going to wait for price to come back up, which it's doing now. You see how price is slowly coming back up and it's leaving all this liquidity, this trend line liquidity. All right. So what we're going to do is, what I do is I mark what's called my supply zone. And this is my supply zone here. And why is this my supply zone? What makes this a supply zone? Okay, so if you notice here, we have a fair value gap. If you zoom in the candles, we have a gap at the top of this range, followed by a break of structure. So we have this gap here between the white and the black. Between the black candle right here, from this white wick all the way. I'll even show you. I'll get the box all the way where I'm drawing from this point to this. You see that? From that wick point to this is called a fair value gap, or a gap, or an imbalance. You can call it whatever you want. There's a lot of different names for it. And so this gives me a confirmation because smart money moves the market, and they move the market with market structure, because market structure just reflects the supply and demand, right? And who controls supply and demand? Obviously, in some markets, it's the people, but since we're in Forex, who do you think manipulates the market? The banks and institutions, right? Because they're in control of the market. The retail traders are the small candles that you see on the screen, all the small candlesticks, and the smart money traders are institutions, banks, hedge funds, things like that. They're the ones that control the market and will show all these giant candles here. And to trade with smart money, to make money with smart money, we need to trade with smart money rather than go against it. And to do that, we need to follow smart money. And we follow where smart money is going by using market structure. So let's get back to the lesson here. So we had our little gap here, which I showed you guys. So what we would do is, for me, when you're first learning, you can write this. You can draw these little zones here, right? I'll get rid of this box up here. You can draw these little gap zones here, right? Now this would be your supply. This would be your fair value gap or imbalance. Now what I do, here's the difference though. What I do is it's the same thing, but I'll actually mark it and make it up here. And why do I do that? Because sometimes it will keep going past this zone. So yes, this tapped into the gap area, but sometimes price will continue going upwards and actually hit my gray box here, okay? So price will go right here, and it will hit this gray box, and in reverse, and it will hit from wick to wick. Because that's the whole point of a gap. It's leaving a gap because the wicks haven't filled each other. So usually they'll fill exact, or sometimes they'll fill 50%. So we're going to just draw it like here, like I have. Okay? So let's say we're waiting for price to come to this area, right? Now what we would do is we would mark our imbalance like that. And you're going to take your black line and put it at the wick of that imbalance. And then you're going to set an alert there. And if you don't have TradingView Pro, get it, because that's what I use for my strategy. You don't need it for other strategies, but for my system, that is what you need. And so get TradingView Pro, add an alert here, and say blah, blah, blah. Have it remind you when it hits this area, okay? Now, when you're a beginner trading off the zone, you're probably wondering, okay, so what do I do when do I enter a trade when it gets to the zone? If you are a beginner and do not have much experience, what I want you to do is I want you to, instead of enter trades like this right at the gray box, I would like you to enter trades. What's it called? I would like you to enter trades right after there's a reaction. So normally people will be like, you can do this too if you have experience, that's fine. But if you're new, I want you guys to have more confirmation so you can get used to the market. So don't enter right here, guys. This is for more experienced traders. If you're new, wait for it to come to this area and then wait for an institutional or smart money reaction is what I mean. Wait for a smart money reaction. So what do I mean by that? Okay, so identify liquidity. Where's the liquidity right now? Well, the current trend, so-called, for retailers, they're all buying their positions. They're all having their stop losses right against this trend line because everybody trades like that. Trend line, support and resistance. But these areas are actually target points for the larger players that are in this market. And so they actually will take your money because your money is lying along this line because that's where your stop loss ends is beyond this line. You don't want the trade to go beyond the line for you. But we're trading smart money. So this is actually, my take profits are liquidity. And for me, I use double bottoms, double tops, and I'll also use a trend line. Okay, so we have a trend line here. And that stands out for me. I'll use that as a liquidity because a lot of people will buy them, and a lot of regular traders with their little money, they trade with these trend lines. So I like to use that as my take profit. So that's where the money's flowing right now, currently. Okay, but later, let's see. It's 5 p.m. It's 5 p.m. and later we'll hopefully see a reaction off of this. But for now, guys, we're gonna wait, let price go, and what we should see is a reaction like this. We're gonna see some giant movement this way, okay, that perhaps breaks a structure right here. So what you want to see is two pieces of structure broken. So these two lows need to be broken before you get into a trade. You want to see price go down like this. Then there's going to be another area. There's going to be all this area of imbalance, similar to the area we have here where my arrow is on the left side of the screen. How we had this dramatic sell-off here. We're going to see that again here because market structure is going down. And so actually, we're going to need to see two breaks of structures. That's what I use for my system. You need two break of structures, and then you're going to enter a trade. So what are the steps? The step one, market structure. Step two is identify supply and demand slash price range because you need that Gambox tool. So I'll write / use Gambox tool. Okay, so you guys can actually screenshot this. And step three, when I'm done, is once you use the Gambox tool. Sorry, I should have wrote that first. So use the Gambox tool first on step two, and then identify your supply and demand because you need to understand the Gambox and what it's for, which is to tell you where you're looking for your zones, whether it's on the top or the bottom. So supply and demand. So supply and demand comes next. Okay. Zones. And those zones can be order blocks. They can be FVGs, fair value gaps. They can be fair value gaps. They can be imbalance. They can be all of that. Okay. So that's your supply and demand zone. So find the supply and or demand zone. And then once you have that, you would set your alert. Set alert. And then once you set an alert / wait for price. Wait for price to come to zone. And if you're a beginner, when you wait, so this is for if you're a beginner. Set an alert, wait for price to come to zone, and I'll write if you're a beginner. If you're not a beginner, you can take trades right off the zones, okay? If you're not a beginner, you can take trades right off the zones. Okay, but if you're a beginner, set alert and wait for price to come to the zone. But you're setting alert if you're a beginner or if you're not a beginner. But what you're doing is, if you aren't a beginner, you're going to actually wait for it to enter trade after it reacts and breaks two pieces of structure, okay? So I'm actually going to say this. Wait for price to come to your zone if you're a beginner, followed by 2 BOS, and that stands for break of structure. 2 BOS, break of market structure. Sorry guys, no, it's all fucking sloppy. But yeah guys. And then for 5, look for entries. So this is for if you're a beginner. So you would set an alert, wait for price to come to the zone, and then wait for reaction if you're a beginner. If you're not a beginner, you can take a trade right on the zones, okay? And then the step 5. Step 5 is look for your entries. So if you, like I said, if you're a beginner and you saw your let's say you saw price break these two areas, right? okay, then you would actually, that's when you would look for your entries. And I know I spelled that wrong. Sorry guys, I don't even know why. Pretty much all of it's wrong. So you would look for your entries after you see the breakup structure. But if you're not a beginner and you want to know the steps to this, I'll actually write that. But for first beginners watching this video, screenshot this, take a picture because I'm about to change it. So screenshot it right now or pause it. Okay. So if you're not a beginner, here's what you're going to do. You're going to set an alert, wait for price to come to zone, and enter. Okay? If you're not a beginner, you're going to enter off of that zone without waiting for confirmation. And then because you have more experience, that's why I'm assuming that you can do it. I do that personally too because I can tell whether it's a good supply and demand zone that I trust, and I have other confirmations. But for 5, what you're going to do is once you send an alert, wait for price to come to zone and enter, and then 5 is identify sell side. Sorry. Identify. I'm not going to try to do that. Liquidity. I'm just going to be simple. Identify liquidity. And that can be trend lines, double bottoms, blah, blah, blah. Okay, so trend lines and double bottoms or double tops, okay? So when we're selling, these are the steps. These are the steps for if you have experience. So the previous steps I wrote before are different because that's for if you're a beginner. So if you have experience in the markets and you're kind of comfortable, screenshot this, okay? Okay. Now, this is basically what I wanted to show you guys. So basically, if you're a beginner, you wait for it to break these 2 zones here. I'm sorry guys. These 2 purple lines here is your structure. So you need it for it to come to that gray box first on the top of the screen, and then break those 2 purple lines that are going horizontal, which means sideways instead of up and down. Okay? And that is pretty much all you do. But if you're a non-beginner, you could literally just enter here. I'll show you. If you're not a beginner and you have some experience, you can just enter off of that zone because we have market structure to confirm our direction. And let's say this is where you want to enter. You can enter off of this zone right here. Oh, it might be entering on this fucking video. I might have to fucking get my phone out for a second. And then you would choose your stop loss. I'm not going to talk about stop loss placements in this video. I'm going to talk about just this stuff. And I'll talk about that in the next video, but I don't have time because I have to do something. But for this, your take profit would be what? I said liquidity or double bottoms. Now, I am going to tell you the R&R. Because I want you to know. So we want in my group, minimum we want a 7 to 5. 7 to 5 R&R, risk to reward. Or you can do you can go beyond that, but don't go anything beyond, like for example, this. You see how it's at 11, 10, 10 to 74, 10, 10 to 5. I'm looking in the middle of the trading box where it's that gray box in the middle of your screen that he's looking at with the numbers underneath that red box. The letters and numbers on that. So this would be too greedy, okay? I mean, this wouldn't be too greedy. This would just be right at no more than this should be your full trade ever. But for this video, your take profit can be anywhere along this line, really, or double bottom. So minimum is 7.5. So the minimum needs to be, the minimum starts around here. The minimum starts around here. So what I'm going to do is, there's not really a double bottom. Oh, wait, yeah, there is. Yeah, there is. Okay. So this would be your double bottom / double tops. So this is the double bottom that you would target. I'm actually going to enter this trade and show you guys this video tomorrow. Let's see. So take profit. That's your take profit, okay? The double bottom, that's your liquidity. And I'll even write that. I'll even turn that to look like the liquidity line. Fuck, where is it? Son of a bitch. All right, let's see, bottom. All right, so this would be your take profit. So you can take profit between double bottoms, like I said, or trend lines, okay? And that is basically the system we use. And if you have any more questions, connect with me on Instagram. I will talk to you guys. I will literally text you immediately after. You can literally just message me. It's Dynasty_Wolves, not with F, not with an F. Dynasty_Wolves. That's my Instagram. So if you guys have any questions, follow me and then just send me a message. And you know what? Oh yeah, well, we can even hop on a Zoom call if you guys feel like it. Um, I'll do what's it called? I'll look at your charts if you can screenshot. Show me your charts, man. Like just message me. I'm here. Show me your charts. I'll show you my charts. I have a lot of resources. If you have any questions, just feel free to always ask me something. Okay, guys. But yeah, this is basically how I do my trades. It's really simple. I don't keep it. I don't have a bunch of shit on my screen. I don't like to keep things complicated. I like to make things very simple. It literally took me 4 years to trade like this. I know it looks all easy and everything, but it wasn't. It literally took me 4 years to understand it. So it seems easy, but for me to understand every single step and make it this perfect, I know nothing's perfect, but you know what I mean. It literally took me 4 fucking years. So yeah. And if I do have a group, I don't have a course, so I don't really like courses because if you need help, you can't really ask for help. You're just paying for a course and you can't really do anything, or it just sucks. So, but I have a community. I don't have a course. I have a community, and it is a membership. It is a paid community, but there is no course. Now, what there is in the community, there's ebooks. There's an actual community that can help you and be there for you, and there's an entrepreneur chat we talk about as well, and there's also videos. So if you're worried about like, oh, what if I want a video? There's private videos that show you more in depth. So if you wanted to know like the stop loss stuff and more exact stuff, like more like detailed than this, even more, then just that would be my group. I have that. We have a bunch of fun shit in there. We have like lo-fi calls. We just chill. Sometimes we'll just call and we'll just do dumb shit and just But yeah, just basically message me on Instagram. I'm sorry to make this video so long, guys. I hope you guys all have a good day. Don't give up on your trading journey because it's not worth it, because you literally have leverage over most people. Most people, they literally just don't develop any skills, just go to the job and blah, blah. They don't develop anything in their life. So you're actually taking the time to develop a skill that's profitable and good for you too. So yeah, guys, I hope you guys are as passionate about this as I am, and you guys like the markets and it's actually educational too because it teaches you about macro and micro and economics as a whole, macroeconomics, microeconomics. It teaches you about how to analyze government released data from agencies and understand the health of our economy. So it's pretty educational. But yeah, guys, peace out.